Good morning. It's Harvey Jackson from Producer Profit. Just going to get through some of the rhetoric out there. I'm not going to be able to get into all the stuff because Trump treaty sending out messages in the middle of the night and the Chinese trade and everything else. But things are looking a little bit better than they had. Countries are coming to China or to U.S. to make some concessions, and Trump is throwing them back out. But the market is actually maybe settled down a little wee bit. But I thought I'd maybe just work through this a little wee bit. What is a recession versus a depression kind of thing? A recession is 6 months or two consecutive 3 month periods of the GDP going down. So now will that market actually price in a recession? I'm going to say they're probably going to get some pain in the U.S. for sure, and whether it causes the world to actually get into that as well, because when you increase minimum base level 10% tariffs, you do move some increases in inflation, right? So you do have some of that as well. Whether people are actually going to get laid off. So the causes of recession, and here I just highlighted in a couple different colors: lower consumer confidence, which we know that's already happening, cause of negative events like war or pandemic, and it's amazing that somebody put in pandemic there. It was only 5 years ago, which leads consumers to delay spending. I think there's going to be that for sure. And then it says crisis in the financial system. We saw that kind of try to correct itself here a little bit today with a little bit of a recovery, and international trade wars, government spending cuts as well, sudden disruptions in supply and demand. So that's another thing that's going to end up happening as well. And then the difference between a recession and depression: depression is more severe than a recession and lasts longer. Recession on average lasts up about 11 months. So just a clear definition, if it's clear at all. So China's sticking to its guns on the fresh U.S. tariff threat, pushes tensions to the brink. So overnight, Trump put a 50% tariff back on top of the China putting their retaliatory 34% tariff on. So I think they're over 104%. Yeah, 104% tariffs now if the 50% were to go back on top of the other tariffs that China put on. So it's very complicated, but 104% tariffs, and China's pushing back as well. So if tariffs, and I thought this was an okay graphic, if the Trump tariffs may cause big price hikes in these areas. So you got clothing, toys, games, computer, smartphones. So you're going to have a 27 price increase in smartphones because of just where they're manufactured, residential construction materials, on and on. But you can see where that's actually going to be impacted. Dollar falls as prospects of tariff talks calms global markets. So here's your tariff, dollar falls, but it's actually been in a bit of a recovery. And some of that is because of some of the people coming to the table to U.S. taking off some of their tariffs. Like India has very heavy tariffs. Europe has a lot of tariffs, and they're saying, okay, we'll take them off. And Vietnam, I think, is trying to take off some tariffs as well. So you've got quite a number of the countries actually bowing to the king. China boosts Indian rapeseed meal. So this is the other part of the headline. So you can see that they bought 52,000 tons of Indian rapeseed. And just to reiterate how much meal that they have bought, in the past, China imported 2.02 million metric tons of rapeseed meal from Canada and 504 tons from the United Emirates, and 135 tons from Russia, just according to customs data. So this is just the meal exports by year. China being the blue. So of course, the last data, they're going to pull the highest, of course, because that's how you make news. You don't look at the past, but you could see during the trade war, or they were only got to 1.5 million metric tons of purchasing, where you look at the U.S., they're definitely the lion's share. So this is just by the month actually so far. So they did buy a fair bit in the last couple of months here, so you can see here. And if you look at China meal imports, they do import, let's call it 3 million, and who has it? It basically United States imports the most, and then China behind. And that kind of is the graphic. So global meal exports is at close to 10 million metric tons, and Canada makes up about 5 of that, I think. So of the crop progress report, of course, there isn't a whole lot of planting of a lot of these other crops, but they're starting to give you ratings of the winter wheat. So 40%, 48% good to excellent. So last year was 47, and just how it's 55 in late November, so it lost a few percentage points. And we'll be able to get that on every Monday going forward. So canola is slightly up to down, depending on which month you're talking about. Rapeseed is up. Soybean oil is slightly up as well. Crude oil down. Oh, actually trading flat. Your diesel fuel is down. Your soybeans are up 10 cents, and your wheats are all up. And your Canadian dollar is green as well, and your beef is down. I did see an article on beef, and maybe I'll touch on it when we get to that slide, but Aussies are not happy with the 10% tariff on their beef, that's for sure. So you can see that the market has had a pretty good recovery, filled that gap, of course, and it looks like it's kind of consolidating at the top of this gap here. Now, looks like it still could actually break through and get some more length here, and I believe it will, but the May contract will be expiring at the end of this month. So we are trading the July contract and still expecting to get some length up to here from where we are right now. Big trading range yesterday, but looks like it's consolidating a little wee bit here, and soybeans actually following along as well. So if you look at European rapeseed, if we look at it, we are $186 differential, and they're $504, I believe. A bit too small for me to see, sorry. So soybean oil, a little bit of a green day finally, but it's actually, if we just measured this move, we're at 50% kind of area, so it's an important place for it to bounce off of and move back up. Palm oil, still trading at the top end of this range, or bottom end of the trading range, but it's still relatively high from where it traded lower. Crude oil, still at your $60 barrel. You hadn't traded that since 21. And here's your diesel fuel. It's fallen off a cliff here too. So if you're looking to cover some of your fuel needs, I would be looking at it. Can't expect the crude oil prices to stay where they are for very long if the economy is going to recover. Now, it may or may not do that, but soybeans, a bit of a recovery, which is exactly what we want. Here's the Canadian dollar, so we're trading just above that top edge of the trading range that I have in here. And let's get into wheat really quick. In the last couple of days, we've had some positive moves. But it's going to take quite a bit to make a higher high here. Here's your Kansas, a little green on the day, and your Chicago's green, and you can see that your Matif French wheat is actually trying to claw back here as well. Corn, you probably have to get above these values up here before you can say that you're making higher high, but it is a nice little uptrend, but it needs to break out here for it to be and remain bullish. Here's your feeder cattle, those that went short up there. They've got a fair bit of protection for the downside. I believe you should even maybe move this your take profit a little bit lower, probably in that range right there. You'll probably very likely bounce off of that, but depends on the news. And here's your live cattle. April 10th, we're going to have a USDA report coming out.